Tesla chief executive Elon Musk has made the impossible possible, defying huge odds and consistently outperforming expectations since taking control of the electric vehicle manufacturer in 2008. Without a doubt, Tesla has been giving shareholders exceptional reasoning to hold on to their stock. For example, during the first quarter of 2020, Tesla continued to surpass its initial timeline by launching its Model Y SUV about 6 months earlier than planned. Also, throughout the entire year, Tesla seemed adamant on expanding production and rapidly made progress on the new constructing factories in Shanghai, China, Berlin, Germany, and Austin, Texas. Most recently, Tesla has been reporting major growth in executing its vehicle deliveries. With precisely 201,250 vehicles delivered last quarter, they're also seeing significant cash flow improvement. Third quarter earning reports were detailing $1.4 billion in free cash flow. Most important of all, keeping investors eager is Tesla's mass potential in 2021. Bullish analysts would advise against selling shares of such a prosperous business like Tesla. With its highly successful performance, doing so could be a mistake, they propose. The EV company's execution in 2020 essentially exceeded most investors' expectations, and they seem right on track to do the same thing in 2021. But there's one issue that still stands: the valuation of the company. It's beyond important, no matter how favored the EV maker is compared to its competition. Tesla's valuation doesn't show to be true, and can be difficult for investors to understand. Its current market cap sits at over $600 billion. But trailing free cash flow for 2020 was around $1.8 billion. Using the price-to-sales ratio, the stock is highly overpriced. Perhaps execution in highly important areas like self-driving technology and prioritizing the company's nascent energy storage business ultimately show Tesla's promising future, with plenty of time for the company to live up to its valuation. All things considered, analysts would confirm to hold on to Tesla shares, specifically for bullish investors with a high risk tolerance who plan to hold for 5 to 10 years plus. With such astronomical gains, volatility is expected. But on the other hand, buying into the stock at this valuation may be too risky, and many would advise against it. Although investors would urge to hold on to shares, perhaps now would be a time to consider taking some profit by trimming down on your position with Tesla, particularly if other stocks in your portfolio have outperformed in relation to Tesla. So, are you invested in Tesla stock? Do you think it's time to sell and cash out on earning? Or are you holding even further like other bullish investors who favor Tesla in the EV industry? Let us know down below in the comments. Also, if you enjoyed this video, don't forget to like and subscribe for more future investor content. Thanks for watching.